From R.D. Smothers Wealth Management, this is The Retirement.
When you retire, if you want an exciting life, you need a boring investment strategy.
Matters.
If you enter into retirement without a plan for income, you're not retired, you're simply unemployed.
Podcast.
Hey, this is your host, Dale Smothers, and you're listening to the Retirement Matters Podcast. My hope is that you will find the information you need in every single show on how to do one of the three things: either saving more money more efficiently, planning better for your future where you can live in retirement worry-free, or my favorite, how you can live a happy and fulfilled life in this life you have been given. We know that your time is valuable, and we appreciate you spending it listening to this episode of the Retirement Matters Podcast. On this episode of the Retirement Matters Podcast, we go into a couple of things that are very important for an individual, let's just say it that way, an individual who's considering a partnership with R.D. Smothers Wealth Management. This is very important for you to know. For any individual who is entering into retirement, we talk about two things specifically. We talk about why it's important for you to take advantage of the current condition we find ourselves in today. If you're close to retirement, now is the time to take action. And secondly, if you're considering doing business with R.D. Smothers Wealth Management or any other firm, know how they structure their fees. And be careful of those who charge you a commission to invest your money. This is the type of advice that we give our clients in our first appointment. And this is also how we help establish a relationship with our clients that we consider a partnership. It is not a transaction. It is a commitment to walk hand in hand through this journey we call retirement, making sure that you can get as much out of it as possible. So if this is something that you would be interested in, or maybe it's something you would like for us to assist you in, even if it's just taking a second set of eyes of a proposal that you have from a local advisor, and maybe we're someone that's not quite as close to you as this other advisor, but you'd like for us to just take a look at it. Give us a call at 270-600-PLAN, or maybe email it to us, contact@rdswealth.com, or you can always navigate to our website, rdswealth.com. And on there, you'll find a button that says schedule a time to talk. And we would be happy to sit down and answer any questions you have, or maybe just give you some guidance, some peace of mind, if nothing else, that what you're doing is the right thing and that the next step for you is laid out clearly so that you can take it with confidence. So without further ado, I'm going to jump to this week's episode. And, at the very beginning, we talk about Thanksgiving, and it's a time of Thanksgiving when this episode was cut. But no matter when you're hearing this, whether it's Thanksgiving or Easter or the dead of summer, I want you to know that the advice that's found here, at least in the last two sections, is advice that you need to take to heart. And you need to be aware that the market doesn't always go up. You need a partner in this thing, and there's much more to it than just investing. But when you get ready to work with an advisor, make sure they're feeing your account in a way that they are incentivized for giving you good advice and not just selling you the flavor of the month in investment products. So without further ado, let's enjoy this show of the Retirement Matters Podcast. Good morning to you. I hope you're doing well. You are ready to start discussing all things retirement matters. This morning, we have a show that is timely for what is going on in the market right now. A little bit of a sell-off, a little bit of a pullback. And if you're paying attention to the market and you're concerned, you're probably not alone. But the question is, should you be? And today we are going to discuss that in great detail and even outline some things that you should be doing if you are close to retirement. Maybe if you're far away from retirement, some different things that you should be doing, the course of action you should be taking, and the turns that you should be making along the way. So we are into this show already, almost a minute in, and it has got only 29 minutes left. I better get to it. First, we've got to start with this pause for positivity. We are in the season of gratitude, and this is a great time to simply just slow down and take a breath. Sometimes this pause for positivity is physical, not just metaphorically. There's a lot of negativity in the world right now. There's a lot of things that just seem like the world is moving faster. The world is more negative the darkness of this world, if we're not careful, can get us overwhelmed unless we are in an area of light. And sometimes it's upon us to make that light come to fruition. And it's easy to focus on what we're missing. Maybe it's easy to focus on what is next. But what I want to do today is I want to take just a moment and I want to shift your attention to what is already here. And what I mean by that is I want you to think of one thing, just one thing that you would genuinely be thankful for. And maybe you can even frame it in this way. What is one thing that if you were without, you would miss beyond anything else? What is that one thing that if it were gone tomorrow, when you wake up, you would wish 100 times over you had spent more time, more attention focusing on? Maybe you wish you spent more time with this person, if it's a person. It could be your health. It could be your family. It could be friends. It could simply just be comfort in a warm home. Whatever it is, I want you to think about that thing. And as we begin to discuss here over the next couple of minutes, I want you to consider how you're grateful for that thing. You see, gratitude does not have to be big to be meaningful. A lot of times, gratitude is the fuel of generosity. And as we reflect on this one thing, perhaps, maybe this one thing that we're thankful for, maybe you've got a list of things that you're absolutely thankful for, it's naturally opening the door to gratitude. I'm not talking about giving financially. Forget that for a minute. But I want you to think about how you can give kindness, time, patience, or just encouragement. These things that are not monetarily quantified, but they are so significant. And sometimes the smallest act in these areas, maybe again it's patience or time, the smallest act of kindness or encouragement makes the biggest impact in people's lives. We are not here to simply go about our life concerned about only the things that we're concerned about. We are to be thankful for the things that we have, thankful for the things that are currently present in our life, and then be generous in giving back. And so today, I want to give us a challenge for the rest of this week. As we approach Thanksgiving, I know we're not at Thanksgiving week, but this is a time for Thanksgiving, and the thankfulness spawns the giving. You see where we're going with this? The thankfulness for what we have will breed generosity for what we can give. So together, I want to accept this challenge. Me and you, we're going to accept the fact that we are to be thankful in this time of Thanksgiving. Thankful for the things we already have, not concerned about the things that we want next. And with that, we are to give generously, give time, give patience, give encouragement, give these things, give an act of kindness to your fellow man. And with every one intentional act of kindness, it will change someone's day. I'm confident it will. And when we change people's day, their lives change incrementally, and then the world changes because we were intentional. So this week, let's be intentional with both our gratitude and our generosity. And together, let's change the world to be a better place. That's our pause for positivity this week. I'm going to go to a quick break. We're going to reset, and we're coming back to discuss this market, which unfortunately for the last week, maybe even two, depending on where you've been invested, has been everything but positive. We're going to a quick break. We'll come right back. We'll talk about this market and why it's probably not worth worrying about, but it is certainly worth considering your options to put you in a better place for the future. Don't go anywhere. We're coming back with more Retirement Matters right after this.
You're listening to the Retirement Matters Show with Dale Smothers. Dale is the founder and president of R.D. Smothers Wealth Management, serving the residents of Kentucky and Tennessee. We specialize in building retirement plans that allow you to walk away from the worry of running out of money. We are happy that you're listening in and hope you find value in this week's episode. If you'd like to listen to past episodes and find exclusive content and full-length interviews, search for the Retirement Matters podcast on the podcast platform of your choice, or visit us online at rdswealth.com. While you're there, be sure to sign up for our free weekly newsletter. That website again is rdswealth.com. If you'd like to chat with a member of our team, you can do so absolutely free by calling 270-600-PLAN. That's 270-600-PLAN. Visit us online at rdswealth.com and be sure to sign up for our free weekly newsletter.
All right, welcome back to the show. Let's talk about the technicals of the market that we find ourselves in right now. The market over the last couple of weeks has been led lower, and in part, that has been led lower because of technology and the artificial intelligence trade. Now, if you don't know what I'm talking about, that's okay. But what I want you to see or hear in this show is that while the market is in a sell-off, it actually poses opportunities. And we're not in a significant sell-off, but if your portfolio has been positioned in the wrong places, you have felt this sell-off more than others. And if you're young, this sell-off is a tremendous opportunity. There are stocks right now on steep discounts from their all-time highs. Those stocks are revolutionary, and a lot of those stocks will help change the world. Now, I can't tell you exactly on the radio show which one you should be buying, but there is a good chance that if you have seen losses in names you already believe in, now is the time to add money to those positions. If they are in the artificial intelligence world, or maybe just the technology world in general, you're probably looking at some pretty decent prices when you look over the next 10 to 15 years and you see what it could grow into in that period of time. In other words, you might want to consider buying this dip if you're over 10 years from retirement. But if you're closer to retirement than you are farther away from it, or let's just put it into a more measurable term, if you're 5 years or less from retirement, you should be making this preparation for what we call income phase, and that preparation should be now more than ever. Because what we've seen over the last couple of weeks shows the fragility of the technology trade. To say that we are in a bubble with technology names would be an understatement. We are overbought in many, many technology names. Now, over the last couple of weeks, some of these names have had some air let out of them, and that is altogether a healthy thing. But even if you are just S&P 500 focused, if the wrong thing happens, and even though you're in a very broadly diversified portfolio, if the wrong thing happens and the wrong domino falls, how does your retirement account fare? Now, if you're having a hard time answering that, or maybe you've never even considered it, then you need to sit down with a retirement income advisor very quickly. And I can definitely tell you where you can find some of those at RD Smothers Wealth Management. Call our office, 270-600-PLAN. But whether it's our firm or a different firm that specializes in retirement income, you need to be aware that not all advisors are created equal. And if that advisor can't war play a scenario for you, if that advisor can't show you exactly what would have happened to your portfolio in 2008 and how to safeguard against another 2008, or even worse, for income retirees, how to safeguard against a 2000 to 2010 type scenario, which we call the lost decade. If you can't know what your portfolio would do in that time and how to safeguard your portfolio during that time, it's very likely that you are working with a growth advisor. And I have done this long enough to know that if you go into income phase with a growth advisor, you are going to have a lot of questions that remain unanswered. And that uncertainty, those unanswered questions, are going to pose significant challenges to you as you begin to attempt to retire the way you desire. Those questions are going to sound a lot like, when should I take Social Security? What about my portfolio? What happens if the market enters another 2008 type scenario. What are we going to do? Where are we going to get our income from? These questions are hard for a growth advisor to answer because their number one objective is to grow the account. And I'm not here to tell you when you enter into income phase, you don't want growth. No, quite the contrary. You want growth. But growth is not the primary objective. The primary objective for you, if you're less than 5 years away from retirement, should be making sure that the money you have saved, the money you have made in your retirement account, stays in your retirement account unless you call on it. We do not want the stock market taking that money from you. We want it to be only going backwards if you take money out of it. And we want the market to help it grow along the way. Growing your money should still be a part of your income phase plan. I'm here to tell you it's possible to take income from your account and still grow your account. It happens. But what happens when the stock market doesn't support that growth? What happens when the stock market's down 20% in a given year? How does your portfolio weather that storm? And does your income have to be cut? Maybe not this year, but in 5 years. Do you still have enough money in your account to sustain that income? All of this can be designed in a retirement income plan that is then supported by your investment plan. Not to mention the taxation of those benefits, not to mention the taxation of those accounts. And just because an advisor has their CPA does not mean that they are an income advisor, nor does it mean that they are ready to present to you a lifetime taxation plan that is designed to save you in your taxes in retirement. See, there's a difference in a CPA that is prepping your taxes from year to year and someone who is looking at your plan for paying taxes to the IRS. It's not that we're trying to save you this year's taxes. It's that we want to save you over the lifetime of your taxes in the what we would call gross taxation of your portfolio. And by doing this correctly, we can save hundreds of thousands, if not millions of dollars over your lifetime because we've just paid that tax at a more efficient time. This also saves your beneficiaries a lot of money. And if it's impossible for your advisor to help you understand how much a Roth conversion should be inside of your plan, or should we be doing any kind of tax loss harvesting this year? Should we be moving money from a traditional IRA to another type of account to help save us taxes in the future? Or here's another one. We're working with a very high net worth client right now to help them understand where and how donor advised funds will save them substantial money. I'm talking massive amounts of taxes over their lifetime, coupled with trusts and estate planning that we will do in coordination with their attorney. This is the type of long-term tax plan that you must have inside of your retirement account. Not what does your tax bill look like this year. I hope I'm hitting my point there. A growth advisor is not concerned at all with lifetime taxation, but rather they are just there to, quote unquote, grow the account. And if the market doesn't cooperate, well, there's always next year, but not for you, because you're entering into retirement income phase, or perhaps you've already entered into retirement income phase. And so this market we find ourselves in today should be a wake-up call for you to say the market does not always go up every single day. And I want to ask you, what happens if next year or the year after that, the market falls and stays down? Can you still retire the way you desire? Can you still retire when you desire? And will your retirement be what we call a live happy retirement, where you can go out and impact your children and your grandchildren and not worry about the money that's in your account? Because whether the market's up or the market's down, your income comes into your bank account. This is the type of security that you must rely on when you enter into retirement income phase. And R.D. Smothers Wealth Management is here to help you do that. This is where we specialize. Clearly, we can help individuals grow their money, whether they're taking income or not. We can help you grow your money. But what we do and where we provide our biggest value is to those who are close to retirement, and they are transitioning from growth phase to income phase, and they know that there are questions that need to be answered, like when to take Social Security, How should I be pulling money out of my accounts? What's the most tax efficient way to get money from one account to another, or maybe from my account to my children's account? How do I protect those assets against long-term care? What about Medicare? What choices should I be making there? All of these questions are questions that you have, and it's unfortunate that most of the time when you ask your advisor, you're met with either go find someone else or we're just not equipped to answer that question. And the reason that you're getting that answer is because you're working with an advisor who is really good at what they do. They're just not built for the phase of life you find yourself in. And it's time to make the change. So I'll offer this as an opportunity for you. If you find yourself asking those questions, we'd like to offer you a free consultation to come chat with someone on our team. There's no obligation. And I think what you find is that you will experience something that you have never experienced before because we're different in our approach, in our relationship with our clients, and in the way that we build a retirement plan that is meant to help you navigate all of the complexities of retirement, not just your investments, but everything else that your investments support. So again, 270-600-PLAN is the way to get in touch with our team. And we would love an opportunity to sit down with you and just be a second set of eyes on your account, be a second set of eyes on your overall plan, and help you achieve the goals, achieve the impact that you were meant to achieve in retirement. And by doing this, we know that you would at least be pointed in the right direction for the next step. And perhaps if a partnership with our firm makes sense, you would have found a partner who is in this with you for the long haul, right beside of you when you have decisions to make and helping you make those turns with confidence, knowing that it will get you to the destination you desire. So 270-600-PLAN, or go to our website, rdswealth.com, and schedule a time to chat today. We're going to a quick break. When we come back, we're going to talk about exactly how we're paid as a firm. There have been a lot of questions asked from people who have came in and maybe chatted with us, or maybe even people who have never called us. I'm sure you've had questions. You've heard us on the radio and you wonder, I wonder how these guys get paid. Well, we're going to lay it out for you. We're transparent in our fees. We're transparent in how we get paid. And I want to give you some comparison to how other advisors may be paid, and why it's important to have someone that you can have a relationship with that is not transactional, but rather your goals and their goals are aligned. Don't go anywhere. We're coming right back with more Retirement Matters after this.
Thank you for listening to Retirement Matters, presented by R.D. Smothers Wealth Management. If you'd like to speak with us, give us a call at 270-600-PLAN. And if you enjoy the information in this show and would like to hear more, you can access previous shows by searching for the Retirement Matters podcast on the podcast platform of your choice. We also produce a weekly newsletter. Receive it free to your email inbox by signing up online at rdswealth.com.
All right, welcome back to the show. We've got about 10 minutes left, and in this segment, I want to give you a very thorough breakdown of how R.D. Smothers Wealth Management gets paid. One of the things that we pride ourselves on is transparency. This is a partnership, and you know exactly how we get paid before the partnership begins, but we've had some questions around how we get paid, and so let's just lay it out here for all to see. Ideally, you want to make sure that you have the right investments in retirement, but it's just as important to make sure that you have the right fees around those investments. And I wanted to bring this to the radio show for the listeners because lately I have seen a lot of people coming into the office that our advisors have brought before the advisor committee, and we have looked at their fees and been completely floored at how much they were charged, either to start the relationship or even ongoing throughout the relationship. And so I want you to know there are a number of ways to pay for fees. I want to go over the two most common, and I want to tell you why it's important that you do not choose one of these two. R.D. Smothers Wealth Management structures our fees in a way, and we're going to dive into the details, but we structure a fee in a way to where when you do better, we do better. And until you do better, we know that we're not going to do better. This is a beneficial way for us to align our interest. And I want you to think of fees as the jockey on a horse. And if we were to try to pick the right horse, we've got to consider all things. And while jockey weight is regulated in real horse racing, unfortunately in investing it's not. So let's just consider for a moment that we were to be able to pick any horse we wanted to, and we picked Secretariat to get on the track for us and run this horse race. Now, we would presume that with Secretariat, we have a very high chance of winning just about any race we enter Secretariat into. However, if we put a 600-pound gorilla on the back of Secretariat, Secretariat will not win that race. It's very unlikely because of the weight of the jockey. So let's equate this then to investing. We can pick the best possible horse or investment, but if the jockey or fee is too heavy, it weighs the investment down. This is exactly what we see taking place, especially in growth phase advisors, simply because they're not concerned as much about the fee. They feel like they can outgrow it. At RD Smothers Wealth Management, our objective is to make everything in your retirement portfolio, including your fees, as efficient as possible. We have to make this thing last you for the rest of your life, and paying too much in fees is not going to help. Our objective is to find the fastest horse with the lightest jockey. We want to shrink your fees, therefore making more money appear in your pocket. And to do this, we build a very transparent fee system where when we work for you, if a partnership makes sense and we know we can bring value to you, we do not offer partnerships to everybody we talk to. Our objective is to make sure that we can bring value to your table and that we can be a partner that you can depend on your very unique journey. And if we know we can be, then we would offer a partnership. And if this partnership opportunity makes sense, we begin to help you make decisions along the way. This navigation through retirement is very complex, and you don't have to do it alone. We commit to doing it with you, helping you make decisions on Social Security, Medicare, taxation of benefits, what to invest your money in, how to take your money out as income, what pension options you should choose, what Social Security benefits you should choose, what Medicare plans you should choose. We even help you establish beneficiaries and accounts that are necessary to pass this money on to your kids or your loved ones or even institutions you care about the most, doing it in a very tax-efficient way, getting as much benefit as you can right now from that money and helping you protect those assets against the nursing home. All of that done for a fee that is much less than the average investor is paying to their growth advisor. Financial advisors will charge you either a commission, which we may call a front-end load, or they'll charge you an asset under management fee, which is based around the number of assets that they are managing for you. Now, we'll discuss fees in just a second, but first I want to talk to you about commissions. Do not work with an advisor in income phase that charges you a commission. I am amazed that we still have advisors today who are charging as much as 6.5% or 7% in some cases just to invest your money. Just a front-end fee alone. On top of that, they're charging you an annual fee. Now, that annual fee, if you pay a front-end fee, can be as low as 0.25, but some of them are charging 0.5%. And on top of that, the funds that they're putting you in have even more fees involved. My goodness, be careful with that. Now, to help us remember this, I want to say something that sounds like it might be said by Dr. Seuss, but it's going to help you remember. If a front-end fee is charged to me, I need to flee. We do not want you working with an advisor that's going to charge you a front-end commission, and they're still out there. I'm surprised that they are. But a lot of even the bigger stores, even the big names are still charging a fee. And I'm telling you, especially if you're entering into income phase, you just need to be aware of what they're doing and ask a lot of questions as to why. Now, if they're not charging you a front-end fee, and this is annuities, this is mutual funds, whatever it is, if they're charging you a fee, a commission. Get out of there. If they're not charging it to you, then they're likely charging you a relationship fee or a asset under management fee. And in our book, that's the right way to do things. And before we get to the percentage you should be paying, I want to tell you why you should be paying a fee as opposed to a commission. A fee aligns your interest with your advisor. If they give you good advice, they make more. If they give you bad advice, they make less in that year. This is the type of fee that you should be paying, especially as you're entering into retirement income phase. That's the fee that we charge at R.D. Smothers Wealth Management. And on average, our clients are paying substantially less than where they come from in their growth phase. If you're ultra aggressive, I can see paying a 1.3 to 1.5% fee. We have people who come to us who are paying 1.5%, 1.45% perhaps, maybe even 1.35%, we'll say that low, in their growth phase. And the reality is all that advisor has done for them for years is invest their money. And when they move over to a partnership with our firm, they find that they are getting much more value while paying less in fees. And if that is something that you think you might want to consider, if it's something you think you should pick up the phone and call us for, we're here to help. Our team knows that we bring a significant value to those who are close to or maybe entering into retirement income phase. Those who are over the age of 59 and a half, we bring an amount of value that is far outpacing the fee that we charge. And we do this with you as a partner in your retirement. We want to help you retire the way you desire, and we want to help you live this live happy retirement that we all talk about here on this show. And I think as soon as you meet our team, you're going to see that we fulfill our commitment to you every step of the way. So with that, I want you to know by picking up the phone, 270-600-PLAN, or navigating to our website, rdswealth.com. And when you get there, setting up a time to talk to our team member. This will be a step towards more clarity and more confidence in your retirement. We would love to talk to you. And whether we talk to you again in person in our office, on the phone, or right here on this same station, I want you to do me a favor and always remember to do these three things at the very least. Save money, plan well, and live happy in retirement. God bless.
Investing involves a risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. R.D. Smothers Wealth Management is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by R.D. Smothers Wealth Management.